Hi guys. So we greatly appreciate. I'm Kian Chong here, the presenter for today. So I really appreciate that your time to present in our webinar on today. So our session will start right now, which is 4:31 p.m. So okay, our topic for today is the mastering contract for different CFD trading. So my name is Tan Kian Chong, and I'm an equity specialist in Philly Investor Center. So today, the webinar for today is from 4:30 p.m. until 5:30 p.m. Okay, what we're going to talk about for today, our content was what is CFD and type of CFD instrument, and how to trade CFD. Also, at the end, I'll share a bit the value added and some sharing with you guys. All right. So let's come to what are contracts for difference. So CFD is actually a derivative product traded on margin, and it also traded over the counter OTC market directly between the trader and the CFD provider without the exchange and as the intermediary. Also, the agreement is also called as an agreement to exchange the difference in price from the time the contract is open until the time it is closed. So also the prices of CFD are derived from the underlying assets that they are linked to. It also allows customer to participate in the price movement of the underlying asset without owning or taking physical delivery of the underlying assets, and is mainly offered as the market maker or direct market access DMA model. Okay, this is what I mentioned just now. Derivative product is the derivative product traded over the counter. CFD is actually you can do it buy or sell or short sell, and once you put in the position, you do not totally own the underlying asset. It's just a contractual agreement between both parties, which is the buyer and the market maker, or the seller and the market maker. Okay, let's compare between stocks and CFD. So for stocks, the underlying of stock could be just equities, but for CFD, it is depend on the respective asset, which it could be equities, commodities, forex, index, or some other more. Okay, so the next thing is the leverage. Stock doesn't have a leverage except that you open a margin account. Then there's another thing. But for CFD, once you open, then you can use to leverage your position up to 20 times 20, multiple 20. Okay, so the third thing is the ability to short. So for stocks, they are limited. I think that, only local stock for SG, Singapore stock, you are able to short. However, for foreign share or index or commodities, you are unable to do it through a stock market. So you only can do it on a CFD, through CFD. You are able to short no matter US share, Hong Kong share, or local share. Okay, the one last thing, the most different thing is the financing charges. Stocks don't have any financing charges, but CFD, yes, because you are leveraging your position. Okay. So the advantage of CFD, the first one is that what I mentioned in the previous slide, which is you can do both direction on CFD account, which is long and short, which you can trade and make profit no matter the market is in a bullish or in a bearish. you can do both position. Unlike equity stock market lah, mostly we can only long, right? Okay, so the second is leverage margin and multiple asset classes. And also you can do hedging by using CFD. So do take note also lah, leverage can be a double-edged sword as well. Because leverage, you can earn up to 10 times, but also you can lose up to multiple of 10 if you leverage your position. Okay, two direction, long and short. This is what you can see. CFD allows you to go long or short as per the chart you can see lah. When you predict the market goes up, then you can long first. After that, you can short and long and short, providing you the opportunity to profit trade in both bull and bear market conditions. So also, short sell occurs without the trader having to borrow shares. Unlike that SGX, if you short a position in a local share, you need to borrow a share from SGX or from us lah, which we are borrow share for you to deliver the share to the buyer who buy with you in the stock market. But using CFD, you no need to buy in any shares. The position is just open, then you can just let it there. As long as the maintenance margin is qualified, no need, you doesn't make any margin call, doesn't cause any margin call, then there will be no penalty and no buy in. Okay, leverage and margin. CFDs are traded on margin. Okay, this means that the trader is able to use leverage to take on larger exposure with a smaller initial deposit. Also, leverage has the effect of amplifying both returns and losses. So, for example, you will need to fork out USD 14,000 to buy a 100 shares of Amazon when the time Amazon at price of US dollar 140 per share. But Amazon as a CFD offer at 10% margin requirement only, which is the leverage can up to 10 times. With CFD, you are only need to put up to 10% of the contract value as an initial margin to buy 100 contracts of Amazon. This is equivalent to US dollar 1,000 to, which is equivalent to Singapore dollar 1,900. You only have to put in 1,400 US dollar instead of 14,000 US dollar. So this is the table you all can see. If the price of the share of Amazon raised by 20%, which is to $168, the gain of you will receive is 2,800, which is 200%, the initial margin. If it raised by 10%, which is the price is 154, the gain will be at 1,400. If you leverage by 10, you leverage by 100%. Okay, so if rises by 5%, the price go up to $147, your gain will be 700, which is 50,000 initial margin. Stay the same, which means no loss, no profit. But also, if the price fall by 5%, $133, you are lost about $700, which is 50% of your position, 1,400. So if fall by 10% to $126, you will lose 4,400, and so on. For if the price fall by 20%, then you will lose about 200%, as is leveraged by times 10. Okay. So also you can refer to this table, written on your CFD table. Leverage can be a double-edged sword. This one you all must remember. So when you earn a lot. Compare with the change in price of Amazon share. You all can look on the table. Okay, next we will talk about the type of CFD instruments. So there are 4 types of CFD instrument, which is the first one is the equities, which is the CFD or CFD DMA. And commodities, we have oil, gold, and silver. For indices, this is just a example to show yours, which is the indices is also US, like for example, US S&P 500, US Technology 100, or Wall Street Index. Also for Forex, for example, I have Europe stroke USD or Australia dollar per USD. Okay, for equities in CFD, you can access up to 8 global stock exchanges if you open a CFD account, because we do offer up to 8 global stock exchange. So for Singapore market, we have over 1,200 counters, which is the largest number of counters available for shorting in Singapore right now. So for Malaysia, we have over 250 counters. Hong Kong, we have about 800 counters. And for China, we have about 600 counters. For Japan, have about 200 counters. And for Australia, we have 200 counters as well. For UK, we have about 90 counters. So for US, we also have quite a lot, which is over 1,500 counters. Okay, so this is the equity CFD as well when you trade the things when you find in our platform. So actually for EQ, when you find DBS, for example, if you find DBS, there will show up 3 things in the list. The first one is the EQ in the column there, and the second one is CFD, and the third one is CFD DMA. EQ means that there is an equities, it's really a stock, like you trade as normal, it's an equities trading. For if it shows CFD, contracts for difference, which means you trade by using your CFD account. For DMA, also same use as a CFD. So for DMA, I'll let you know what's the difference with compare with between CFD and CFD DMA in the page later, in the slide later. Okay. Okay, so for our equity CFD, we do have a cash settlement, and also we mirror the cash market price movement. We don't have any additional spread compared with other brokerage broker house they offer their CFD. This is our difference with them. Unlike, even though they doesn't charge, as I know, they doesn't charge client any commission when they trade the CFD, but they do earn a lot of the spread. For example, when the market show $1 for stock A, they could be offer a spread of $1 point 1.01, 1.02, something like that. They will earn you in a spread. But for us, we just mirror what market price is. So there's no additional spread from us. Okay, so what is DMA? DMA is a direct market access, CFD. Is offered by SGX actually, and order will be filled on the actual exchange. As what I mentioned, CFD market maker, Philips are the market maker. If you trade with Philips, Philips is the market maker. So when you place the order has just come to us, not go to SGX, which you are buying with, not buying, you have an agreement with us only, Philips. But if you place a DMA trade, is order will go to actual exchange, which will go to SGX. So you are participate in the exchange order book, because we send the DMA order to the exchange based on the last done price, not bid or ask. The commission rate is higher for DMA compared with the normal trade, CFD normal trade. Okay. So this is what I mentioned just now. What is contract for different? DMA contract for different. The first thing is you can see CFD enjoy lower commission rates, and CFD DMA trade on market liquidity and order book of the exchange. This is what's the difference. So you can see on the chart, the first thing on CFD, you trade with Philip Security, PSPL, the order may or may not be reflected on the exchange because sometimes we may, if we cannot handle the hedge, let's say if you open a position buy for a took high and Philip thinks that we are unable to hedge the position, we will place the order to exchange as well. This is the difference when we are unable to hedge. We don't want to take the risk and we will put it into market to see whether someone to buy to have an opposite side of a position with you so that we can hedge the contract. So after that, CFD order is filled by PSPL based on the bid or ask price. So for the third thing, CFD trade status reflected on trading system at the end. But for CFD DMA, PSPL will totally straight away send your order to exchange because this direct market access is to SGX1. So order is executed on exchange. CFD trade status will reflected on trading system as well, same as CFD. So there's a different thing is in the first step only, which is the most direct, most simplest term to understand is that if you buy CFD, the market maker is Philips. If you buy CFD DMA, is the market maker is still SGX, which is the CDP. It's full transparency. This is the difference. Okay, let's calculate the profit and loss. For long position, if you long 10,000 shares of stock A at price $2, the stock price goes up to $3 after that. There is a profit of $3 minus $2, which is $1 times 10,000. You are earn $10,000. So if the stock price go back to $1, you are lost for 10,000. So for short position, this one is a long position. So for short position, if you short a 10,000 share of stock A at $2, the stock price is $2 right now. If you short, the price goes to $3, which is inversely with a prediction. You are lost for 10,000. After that, it goes down to $1, which is what you predicted is the right thing. Then your profit will be 10,000 as well. So what is commodities? Commodities are part of our everyday life. The raw material we use in our life, metal, energy, and agriculture. It's like gold, like corn, it's what we can say, for example, oil as well, or silver, all those things. So commodities CFD, access frequently traded commodities. Gold, silver, oil, as what I mentioned just now. And if you trade on CFD, there's no expiry, unlike commodities, future markets, all those. And margin as low as 20%. Also, we do offer mini contracts. This is what it might be different with others. So this is the example of mini contracts. Gold, for example, use gold as an example. Gold USD1, you can buy, you can see the gross contract value is about, you just times 1. Let's say the gold price is 1,008 market right now. If you just buy one, you can buy one. The lowest quantity you can buy is 1. If you buy one, you can see that if you buy one, you can see the value is about 1,800 only. You can buy as low as 1,800 US dollar. So and you can see the margin requirement. Let's go back to the one USD one. You can see the US dollar is about you just need to put about the 20% of the margin requirement, which is 493 Singapore dollar only. You don't need to put in full amount of 1,800 US dollar. So compared with the normal contract, gold US dollar 100, which is times 100. Every one of the gold value times 100. Let's see on that 1,800, the value, the limit price you are praising. times 100, which is 180,000 US dollar you have to buy, even just one gold. So the margin requirement you have to put in is 49,000, about 50,000. So it's compared with other, we are more flexible. This is what I can say, because we offer mini contract as well. So no matter you have huge money or small money, you can trade gold as well. Okay, so what is indices? Indices is typically measure the performance of basket of securities and is representative of chart of the market. For example, Amazon, Google, Meta, Apple, four of these shares what we can say is a technology stock in US, which is listed on the Nasdaq. So it is to track. These four stocks will quite slightly affect the Nasdaq index. This is the indices to trade the shares on the market. So indices in CFD, we have multiple contract size in globally, like Singapore index, SGD 20, or Straits Times index, SGD 5, which is times 5. Singapore index, SGD 20 is actually times 20, or S&P 500 index, USD 5 or USD 1. For Wall Street index, we have USD 1, US Tech 1000 index, we have USD 5 or USD 1. For Hong Kong index, we have Hong Kong dollar 5 and more. Also, we have more. If you have time, you all can refer to our platform, try to demo our platform, which we really offer quite a lot of indices in our platform as well. So also this is the example of indices mini contracts, S&P 500 USD 1 and S&P 500 USD 5. Okay, so what you can see, if you times 1, 4,300, then it is 4,300 and you have to put in $294.79 Singapore dollar only, because the margin requirement is 5% only. So if you times 5, is 21,500 US dollar, the gross contract value, and the margin requirement is you have to put in is $1,473 only, about 1,500. So this is the specification you all can refer to. Let's say the STI Straits Time Index, $5 CFD. Value of one, it means that value of one index point times 5 Singapore dollar. So you can see your contract size. Singapore $5 times price of index times quantity, how much you planning to buy, you're going to buy. So also the target spread is 3.6. Initial margin is 5%, maintenance margin is 5%. So the CFD trading hours is 9 AM to 12 PM and 1 PM to 4:59 PM. So the target spread are subject to variation, especially in volatile market condition and out of trading hours. You all have to take note for this indices, we do have the spread. For example, assume STI is currently at 3,250 points. The STI SGD5 CFD, the bid price we could offer, we are minus 1.8, the target spread, which is 3248.2. For ask price, we are plus 1.8, which is you will get the price of 3,251.5. Just for bid, you have to minus. For ask price, you have to add on the 1.8, as our target spread is 3.6. But this one is not fixed. This is just an example. And it might be different every time. Okay. So let's go to the FX CFD, Forex CFD. So you all can see that for this example, GBP per 1 USD per USD, the base currency is Great Britain pounds and the terms currency is US dollar. So when we enter a buy or sell trade, we are referring to the base currency, and opposite to the transaction take place in the terms currency. So let's understand the quote. For GSP USD is equal to 1.3. This means that 1 Great Britain pounds can be exchanged for 1.3 US dollar. So for example, if go to the next level, GBP USD equal to 1.45. This means that 1 Great Britain pound can be exchanged for 1.45 US dollar. Based on this quotation, profit and loss will be reflected in the terms currency. So remember, whatever the currency is in behind, it is a term currency. So when you trade GBP for this example, the term currency is US dollar, which it will show in the settlement currency, like the terms currency is US dollar, the profit and loss. Okay. So it will, Forex CFD will allow you to access to more than 30 major global Forex pair. And you can track the performance of underlying spot Forex. Also, the margin is as low as 5% times 20 leverage. So the minimum contract size of 10,000, the minimum contract size is the 10,000 base currency. So you all can refer to the picture beside us lah. You all can refer the top word currency, which is USD, Europe dollar, Euro pound, Great Britain pounds, Japan yen, and Chinese yen lah. So the third thing is we are going to talk about how to trade CFD. So first we'll talk about the commission. It is applicable during the opening and closing of CFD positions. If you open but the price doesn't match, which means the position doesn't open, you just queue in the market, queue in the CFD there. We won't charge you anything as per usual as a normal stock trading. So also the commission for equities CFD trades are charged based on the total contract value of the CFD. Unlike, same as the equities. So for equity CFD trades done on the same day for the same counter and will be charged on an amalgamated basis, which is same as the equities as well, stock trading. So what we mean, just to explain further for amalgamated basis, which is means that, for example, if you trade a DBS share for today, you buy 1,000 in this morning, and 2 p.m. you buy another 1,000. All the direction is the same, it's a buy order and it's a same counter. You will be charged on an amalgamated basis, which is two trade should be maybe, if you, let's say you buy 10 DBS, the charges is on your minimum, which is maybe is $25, then if we doesn't do amalgamation, it will be a $50 charge for you on that day. But if we amalgamated, since it's the same direction, then it will be just a charge on $25. So let's go to the next thing. Commodities and indices CFD are charged on per site or per contract basis. Also, the commission is not applicable for, but this is one good thing. Commission is not applicable for Forex CFD trade. All right, so let's look at the finance charges. CFD positions that are held overnight will be subjected to an overnight financing charges. So which means for intraday, there's no financing charges for CFD position. If you open on morning and you close before the market, you close the position before market close, which is the intraday trade, there's no financing charges. Okay, so for accrued on a daily basis and will only be realized upon contract rollover or liquidation of CFD position. For what I mentioned just now, commonly asked question, open and close within a trade day, there's no financing charge, what I explained just now. Okay, let's go into the financing charges, go further lah. Let's let you all understand how we calculate the financing charge. It use the market value times the finance rate for the CFD contract divided by 365. So the MV, the market value, is the total market value of CFD position marked to the closing price of the day. And for finance rate, it's a finance rate for the CFD contract. So what you all can see is that the gross contract value is 134.26. Let's go into the next page. Yeah, okay. So the financing charge is market value times 9 divided by 365. So if you open one long CFD and close the position on the third day, the entry in day one, the closing price is $1,000. Then you hold until day two, $1,200, and you liquidate in day three when the price closing is $1,300. So you can see on the calculation, total financing cost, we use 1,000 to times 5.28% divided by 365 plus 1,002 times 5.25% divided by 365. We will get 0.14 plus 0.17. So equal to 0. Which is 31 cents dollar only. The financing charge for these 3 days for this position. Okay, how to use CFD? Normally we use CFD, we are used to buy, sell, or hold. You can use as a buy, sell, and hold, scalping, and self-developed trading strategies. Okay, so for buy, sell, and hold, there is less initial capital outlay, what we can understand on CFD. As I explained just now, as we have an initial margin, you no need to put in as per the money you wish to trade. So, and is able to attain a higher exposure, aiming for dividends and capital appreciation. Believe that the counter or company will do well or underperform, so we just open a position. So scalping is that normally it's used for day trading. People who day trader, they can see on the chart. When they see the daily chart, it will goes down in the morning, then they will sell first, they will short first. And after that, they think that afternoon will goes up, then they will buy again. They earn on those small prices changes. So when they entry, the stop price is $41.50. 5 minutes later, it could be $41.55. Then they will just close the position and take the profit. Earn that 0.05% and start all over again. This is what day trader do, and this is what you can do in a CFD account. So by using CFD, you can also have your self-developed trading strategies. Like Unit 1, you may have mixture of indicator like you may have the RSI stochastics, moving average, or you might have a MACD. Also, you can look at the candlestick. Like if you see a head and shoulder, cup and handle, you might open a position when there's a chance. And also you can do hedging in your trading strategies. So for hedging, using CFD, how to do it? You can hedge. What you can do in CFD by doing hedging? You can hedge fully by open an opposite position for the same counter and quantity. Let's say that you hold a stock of DBS. You can use your CFD to open a fully same counter. Let's say you're buying, you hold a DBS, then you open a position in CFD as a short sell. So when DBS goes up or goes down, you are still hedging the position. You won't lose the money. You are locking the position of your holding for DBS. So you don't have any risk anymore. When you predict that when you hold, what people will do hedging when they predict that the market will goes down. Let's say I'm holding a long position, holding DBS stock for a long-term periods, but there's a short-term market crash, and I predict that DBS will go down. Then I will use CFD to open a short position so that when market goes down, I lost in my stock there, the DBS value, but in CFD, I can earn the money to cover the loss, which is the hedging. Okay, so for second hedge method, you can hedge partially by open an opposite position in correlated instrument like STI CFD. Let's say you have a basket of share like DBS, Singtel, UOB, and maybe SIA, 3 of these shares. When you predict that the market is going to drop for 3 days or 4 days. So you can open a STI CFD to hedge partially, because when market goes down, you can earn from the CFD STI. Let's say you short the STI, but if you so that you are lost when you lost in the stock there, you can use the STI to cover partially, because the STI won't go down as much as the stock, because it's a basket of shares, as we know, it's an index. So indices are a good hedge against portfolio of index linked stocks. Those index linked stocks is what we mean is that just now what I mentioned, DBS and SIA, those big company. Also, you can hedge with the inverse ETF like SQQQ. It's a short of the Nasdaq 100. Okay, our take on investing. You can have a stop loss, always have a stop loss for every trade. Also, position don't be too big. Do not invest more than what you can lose. Okay, also your emotional. Do not FOMO or greed. You no need to be too greedy to earn until the highest of the price of the counter. Sometimes you may need to be rational. Once you earn, you may entry a new counter or quit at the same time. Take profit. Okay, so do not overtrade, as what I mentioned just now, and the leverage thing. To take note that leverage can be a double-edged sword. Okay. Okay, let's go to the last part, value added and sharing. How does Forex affect everyone? So everyone is exposed to Forex risk, directly or indirectly. Even those, especially those big companies, they do hedge Forex risk oftenly. Example for Apple, Microsoft, and Singapore Airlines. Those companies that doing their business globally, they have a lot of trading in global market, because like as Apple, as we know, they sell their phone to all over the world. So when they do hedging in Forex risk, they can be more focused on their main business, because they already hedge the currency risk. They don't have to worry because Apple is actually, as we know, they're based in the US dollar. So if they sell the phone, they sell their product, they sell their device, if US dollar is keep on depreciating, they will earn lesser and lesser. So that's why before they do the trade, they do their business, they will do totally hedge their US dollar. So they can focus on main business, selling their goods and providing service to the investors. For their consumers. So what about investor? What are investor buying of foreign share exposed to? Let's go to the next slide. By simply investor, they are opening a CFD account. You as an investor can hedge your exposure to various currencies. By taking the above example, if Mr. Tan had sold 10 mini lots of USD SGD CFD, 10,000 notional per mini lot contracts at 1.42 as an Forex CFD hedge, he would have covered his 95,000 exposure in US dollar. So when the US dollar started to move unfavorable against him, his hedge will be gaining on the depreciation in US dollar. Eventually, when he sells his US shares, he would also exceed his hedge at 1.31. So the profit on a FX CFD hedge is 1.42 minus 1.31 times 10 mini lots times 10,000 per mini lots. So the profit is about it's about 11,000 Singapore dollars. The second point is capital requirement on FX CFD hedge. 5% margins on 100,000, which is you only have to put in 5,000 US dollar instead of 100,000 if you want to open the position. So the cost of hedging is zero. Forex CFD is zero commission and has zero financing charges. You don't have any commission and also financing charges on Forex CFD position. from if you open a position with us. Okay, so the swap rollover estimated accumulating holding the CFD for 3 months, there is a negative 0.005. You can earn. These are swap points you can earn. It's an interesting, it's an interest rate, the swap points. Okay, high leverage instruments that is it means risky. So for Forex offers one of the highest possible leverage available. Leverage doesn't mean it's risk, but if you have leverage with money management, then the risk will be reduced. Leverage is an advantage given to traders actually. The way to restrict the leverage that you use is by trading smaller lot size or amount until you find any way or you are comfortable with the trade position size of profit and loss. Okay, so for example, it's a sport car lah. When you're driving, you have to keep on trying the speed. What's the speed you are comfort with, then you can drive safely lah. Reduce the risk of accidents lah, the percentage of accidents. So leverage is the reason some people become rich and other do not become rich also. Okay, so I would like to introduce to our new platform as well. We launched by this year actually, Poem CFD MT5 lah. It's created by MetaQuartz, not created by us, but we work with MetaQuartz MT5 to put our server inside. So successor of MT4 and popular among trading professionals, which they have a lot of things inside, a lot of indicators, trading strategies. You can use Go trading inside as well. And one-click trading is the most famous thing from them. Very convenient to trade, make any trade. Is a CFD. Okay. Compared with Poems, trade with Poems, trade in our platform. But actually both also in our platform. It's just that you're using different surface, different platform, but the blocker is still us. You are still trading with us. So the commission rates to trade in Poems platform is standard, but for MT5 is lower. So for auto close out function, Poems don't have. However, MetaTrader MT5, they do have this function. Credit limit, Poems have the credit limit, but MT5 don't have any credit limit, limit you to trade. So for counters, Poems have up to 5,000 counters. However, for MT5 have only 243. So for this thing, what you can see, the number is quite less. Don't worry, if you have any counters you wish to trade in the MT5, you can try to find out with us. You can email us or call us to inquire about the counter you wish to trade, and we will go into our back office and we request it to put it in the MT5 list in the market lah. So for ledger, Poems have multi, for MT5 only have single for the currency to put in the account. So for one-click trading, Poems don't have, MT5 do have. Just one click is really easy. You just click and you can open a position already. So for advanced order type, both platform have, but for MT5 they have more. For hedging mode, Poems don't have and MT5 has. Hedging mode means that let's say if you want to open a buy position for, let's say, SIA, you open a buy SIA in Poems platform, you cannot open a sell. You can only sell the position. By using MT5, you can open both position buy and sell SIA. Let's say you buy one SIA, you can short sell one SIA unit as well in MT5 platform, which is a hedging mode. You can lock the both position. You don't have to close either one. You can open both in one time, in the same time. Okay. So this is the reward by using MT5 FX trade for reward program. If you are in a tier 1, your trading value in a month is 10 million. You can receive for every trading credit customer receive per 100,000. Yeah, you will receive 20 cents for every 100,000 you trade the value. For tier 2, 20 million, for every 100,000 you trade, you will receive 50 cents. And for tier 3, 200 million, if you want every 100,000 you trade, you will receive 70 cents trading credits. Okay, so for account opening for existing client, you all may open the CFD account, activate the CFD account by go to log in into a Poem. You click on the account management, then you go to CFD, then you click on online account opening. It's very easy. Yeah. You can use Poem Trade as well, our apps. So for new customer, you can visit our website, poems.com.sg. This is the way. When you go open an account, Cash Plus account, you choose Plus account. The step 2, you choose the facilities, training facilities, multi-currency. You may tick all, and the last thing is the most important thing is the CFD. You must tick that account to open an account with us. Also, you can walk into branch, one of our branch. We do have branch in Raffles City Tower, Ang Mo Kio, Boon Keng, Bukit Batok, Holland Drive, Jurong West, Marine Parade, North Point City, and Raffles and Toa Payoh. Any of the branch, you can open a CFD account with us. It's very easy. So how to fund a CFD account? This is the internal transfer. You can go to, let's say if you have a stock account with us, you have a KC account, a cash management account, or cash plus account with us. This is how you can do. It's very easy. Even your money is in your main account, is your cash management account or cash plus account. Then you can go by clicking the account management, stocks. Then after that, you go to online forms, click on the withdrawal forms. The amount to withdraw, you can put in whatever amount you want to withdraw, $1, $100, $1,000. Then you go to transfer into your account, into your CFD. They will show your trading account for CFD trading. Then just submit the request. Okay. So for funding the account by using your bank saving or the bank externally, go into us, you can use PayNow. PayNow is the easiest way. Scan the QR code, put in the amount, add the reference field, put in the reference number, you put in your account number. Let's say your account is 1, 2, 3, 4, 5, 6, 7. Then you just put in the reference number, you put in your account number 1, 2, 3, 4, 5, 6, 7. In behind of your account number, you put in CFD. Then the fund will sight after 10 minutes you deposit. Okay, this is the promotion. This promotion is ongoing from starting on June until it should be end until September. But we decide to extend this promotion since there's quite a lot of client participate and is, for my view actually is really worth it because just trade every month, you will receive a 360 cash credit when you trade Forex CFD. This promotion is until end of this year, 29th of December. So what's the terms? You can look at the promotion here. So this is the, if you execute 8 FX CFD trade, you will straight away receive $20 CFD cash credit. We will credit to you. Just 8 trade. Buy, consider 1 trade. Sell, consider 1 trade. So you buy and sell 2 trades already. So within a month. If you execute another 28 Forex CFD trades, you will receive $100 CFD cash credits into your account. Which means if you do 36 trade, 8 plus 28, 36 trade in just 1 month, you will receive $120 in a month. So for 3 months, because this campaign will run, this promotion will run for 3 months until end of this year. So you will receive, if you do it for 3 months, then you will receive $360 until end of this year. From now till end of the calculation of trades are refreshed at the start of each calendar month and enjoy up to $120 cash credit every month. So we need $360. Also, do remember to try our Poem CFD and T5 platform, what I mentioned just now. Is a really quite advanced platform. This is a demo account. You can open a demo account to try first. You don't have to open a trading account. You can open a demo account, try demo. Okay. This is a disclaimer. So if you have anything you want to ask about, you may find out with us by email us or call us at 6812-1565. I will pick up the call. My name is Kian Chong here. You can scan, if you want to open an account, you can scan the QR code on the left hand side, or you want to join our Telegram group. Inside the Telegram group, we have quite a lot of market information. We will update you quite a lot of news and market outlook, everything. It's quite information. All right, so we have come to a Q&A. May I know, is there any question so far? All right. So if you all don't have any question, then I'll end the session. Thank you for your time and thank you for participating in the webinar for today, what I conduct today. And do not hesitate to ask us any question by email me, email to my company email and to call us. Okay. So I'll end the webinar right now. Thank you everyone and have a good day. Bye.